Hello everyone. Today we're going to talk about the classic bearish candlestick pattern. The three black crows is one of the most commonly seen reversal signals in the stock market. It usually appears after a period of rising prices and is a typical bearish signal, indicating that the market may be weakening or a trend reversal is on the horizon. Let's dive into a real-life example to understand the meaning of the three black crows pattern and how to use it effectively. What is the three black crows pattern? The three black crows pattern typically consists of three consecutive large bearish candles. The opening and closing prices of these candles progressively decline, forming an expanding downward trend. The specific characteristics are as follows. First bearish candle. The first candle is a long bearish candle, signaling that selling pressure is starting to appear. The opening price of the second candle is below the closing price of the first candle, and it also closes as a long bearish candle. The opening price of the third candle is below the closing price of the second candle, and this candle extends further downward. These three consecutive long bearish candles create a progressively falling trend, indicating that the bearish sellers are gaining control and confirming a potential market reversal. Market implications of the three black crows pattern. When the three black crows pattern appears, the market is typically transitioning from a period of rising prices to a weakening phase, with increasing selling pressure. The appearance of three long bearish candles suggests that selling pressure is intensifying and that investor confidence is being shaken. This is a very strong bearish signal. This pattern usually signals that the market has reached its peak and may continue to decline. Investors should approach the market with caution. Confirmation signals. Confirmation. When the three black crows pattern appears, it's crucial to confirm that it forms after a strong uptrend. The validity of the signal is stronger when this pattern occurs after an established uptrend. Sell signal. The appearance of the three black crows typically means that selling pressure is increasing. Investors can consider selling or setting stop-loss orders to avoid holding on to a losing position, combining with other indicators. To improve the accuracy of the signal, it is beneficial to combine the three black crows pattern with other indicators, such as RSI or MACD, to confirm the market's reversal signal and avoid false interpretations. Example. Let's assume a stock price rises from $80 to $110 over a period of time. During this period, the stock encounters resistance and starts to show signs of a downtrend. The first bearish candle appears as the stock drops from $105 to $100, closing lower and showing that selling pressure is starting to increase. The second bearish candle follows, with an opening price below the first candle's closing price. It continues to drop, closing lower at $95, indicating that selling pressure is intensifying and bearish sentiment is growing stronger. The third bearish candle appears, with an opening price below the second candle's closing price. It closes even lower at $85, completing the three black crows pattern. At this point, market sentiment becomes more pessimistic, and the stock continues to fall. Investors can use this signal to consider selling and avoid further losses as the market heads lower.